Hi and welcome to Leavitt Brothers tutorial on bearish trend lines. Many charts set up nicely and have obvious support levels that are playable, but the charts don't always exactly fit the criteria of one of the bearish chart patterns we follow. So we clump these together in the bearish trend lines group. Bearish trend lines are either continuation patterns or reversal patterns. Small trend lines that form within a downtrend are continuation patterns that definitely have a bearish bias. Although the stock may not exactly fit the description of a bearish flag, pennant, or wedge, or it may be the result of a descending triangle or symmetrical triangle that traded beyond a 3/4 mark of their patterns, it still remains a weak stock in a downtrend that is temporarily resting before most likely plunging again. These trend lines shall be played the same as the continuation patterns discussed in other videos. This is to say, a volume surge is not necessarily required on the break because it often signals that of a capitulation sell-off, and a bottom often forms soon after. Instead, a delayed volume surge is preferred. Bearish trend lines also appear after a stock has experienced a big rally and tops out. These would fit into the reversal pattern camp. A large pattern indicates many stockholders would be showing a loss if the stock traded below support, and these stockholders would create much of the downside selling pressure. Let's look at a couple random examples of trendline patterns that don't exactly fit one of the other chart patterns we cover. AES. Perhaps on the weekly chart, this pattern would appear as a descending triangle. But with the trendline support easily defined at 40, it really doesn't matter what you call it. The stock was still playable when support got taken out. Volume was stronger than we'd like to see when the stock initially broke down, but the stock never moved above support. Then volume ramped up. Then the stock bounced, got rejected by the previous support level, formed another trend line, and then broke through and sold off as volume ramped up. Aero Electronics. Continuation pattern within a downtrend. Support was easy to define and volume ramped up as the stock fell. Exactly what you want to see. CLS. By some stretch, this could be considered a bearish rectangle, but again, it really doesn't matter what you call it. It's playable when support is taken out. Just make sure the most recent low from within the pattern is also taken out. L3 Communications. This would be considered a reversal situation. The stock rallied and then formed a 4-month top that doesn't meet the criteria of a head and shoulder top, but when support is easy to define, it's still playable. GNK. Continuation pattern. The second bounce off support was not big enough to form a descending triangle, but the pattern was still playable when support was taken out. Notice how volume was stronger during the 2 weeks after the breakdown than during the breakdown. That's what you want to see. Manpower. Simple continuation pattern within a downtrend. That wraps up this tutorial. Again, bearish trend lines are bearish setups that are either continuation patterns or reversal patterns that don't exactly meet the description of other bearish chart patterns. Nevertheless, they're still playable when support is taken out. The extent of the decline will often depend on the overall market. A weak market will greatly help in achieving a more ambitious price target, but in a strong market, a trader should be happy with a small gain.